Hello traders, this is Joanne with Succeed in Forex, bringing you the Forex market news for January the 17th, 2008. The headlines out of Switzerland this morning read, "The dollar gains ground against the euro and gold tumbles off record highs." For those of you looking for an answer to whether the Federal Reserve will cut interest rates by up to 50 basis points at the end of the month, might have gotten a glimpse of the answer today. December's CPI remained high at 4.1%, although it was down 0.2% from a 4.3% in November. There continues to be rising unemployment and overall economic weakness in the U.S., which has prompted the Bernanke-led Fed to look more closely at long-term economic growth instead of inflation. Investors will be listening carefully as Fed Chairman Bernanke speaks to the Housing Banking Committee today. The spot price of gold tumbled for the second day in a row to a low of $8.75 per ounce, coming off its all-time record high of $914.50 on Monday. As the dollar creeps back up in a pullback to the prevailing downtrend, investors took an opportunity to cash in on their inflation hedges. The dollar was firm in the Asian session after a strong rally in yesterday's U.S. session. I'm not sure if I am going to be pronouncing this gentleman's name correctly, and if I don't, I do apologize. But it was the ECB's Mersch's dovish comments which sparked yesterday's dollar comeback. He stated that the Eurozone growth would continue to moderate. There is increasing signs that we could see the euro-dollar reversal as the ECB begins to prep the market for eventual easing. Also, the slightly positive tone of the beige book supported a stronger dollar. The euro-dollar traded in a 146.30 to 146.87 range, while the dollar-yen traded between 106.87 and 107.44. New Zealand's CPI for the fourth quarter was slightly higher at 1.2% versus a 1% that was expected. So its overall reading is mixed and doesn't really provide clarity to its January 24th meeting. Without support of its interest rates and in the face of the slowing global economic outlook, we are expecting some moderation in the New Zealand and Australian dollars. Forex markets were volatile in the European session, although the market lacked real drivers. The dollar-yen slid to 106.62, and the euro-dollar reversed off of 145.89's day's low, reaching 147.11 before losing its momentum, which is approximately a 50% retrace after the fall yesterday. A seasonally adjusted Eurozone trade surplus fell for the third consecutive month to $2.7 billion in November. This suggests that while export growth is slowing, the external sector is in decent shape. A larger-than-expected drop in U.S. housing stats reached a 16-year low and suggests that there is still a downside risk for U.S. home builders. The drop in initial jobless claims reached 301,000 last week, from 322,000. This indicates that the conditions in the labor market might have unexpectedly improved in December. However, you shouldn't put much weight in this, since the trend has been down for several weeks. Yesterday's U.S. data, especially the CPI uptick, should have little impact on the overall Fed easing expectations. It is still believed that the FOMC will look to cut rates by 50 basis points on January the 30th. Today, Bernanke will be testifying on the U.S. economic outlook before the House Economic Committee, where he has an opportunity to shift market expectations. However, it is expected for him to toe the line, so to speak, and will probably be repeating his quotes such as, quote, "downside risk to growth have become more pronounced," and his other quote, "additional policy easing may be necessary," unquote. This testimony will be followed by the Fed's members Fisher and Lockhart. The markets will be very interested in hearing if there's any real deviation from the company line, especially after the impact that the European Central Bank member had yesterday. This concludes our news for today. We hope you are finding it beneficial and that you have a wonderful trading day. We would like to invite you to check out our website at www.succeedinforex.com and you'll find a link to our Yahoo forum, which is also Succeed in Forex, and we look forward to seeing you there very soon.